there's a girl that was
Oh.
drowning.
Oh,
So
never mind.
I went down trying to save her, and I almost died.
I did not expect the story to go that
I
way.
didn't.
Was she naked?
No, I wasn't naked.
What's going on, guys? We're here with another episode of the After Hours podcast. We have a very, very special guest today. I don't even think he needs an introduction. Joining us is Steven Dux, who is a bit of a legend in the small cap space. So thank you for coming on, Steven.
Hello, guys. How are you guys doing?
Good, man.
So I know there's a trading podcast, and we're gonna get into trading and questions like that. But selfishly,
Yeah.
I have my own question. Is I hear you're a bit of a car guy, so I want to know what your car collection looks like these days.
Cars. Right now I have a S580, the Mercedes Benz. Have a Rolls Royce. What's the? I think it's Ghost.
Ghost.
Ghost. Yeah.
That is dope.
I also have a Koenigsegg, Regera. Used to have a SVJ, but sold that one because that one was giving me headaches. So
Koenigsegg is the one that I'm most interested in. How'd you end up deciding to get that car? Because that's like a multi-million-dollar car. It's specially built, Christian von Koenigsegg, the whole thing. So how'd you end up deciding to get that car?
I always wanted to get one. I just, as I said, I need to make, I don't know, multi-million-dollar in one trade. That's how
the trick.
Yeah.
So which trade paid for that car?
Initially it started with DWAC. That was
Donald
yeah,
Trump
well,
bought you.
So it's a Trump car.
yeah. Well, not necessarily a Trump car, but it was.
And that was, I think, close to 6 million, right?
It was 6 million. Then the following day was 3. The following day was 4. So it was.
Was that your biggest? Was that your biggest single one-day winner? That DWAC?
I think so. Yeah.
Well, and first things first, buy the Koenigsegg,
huh? Didn't count Trade Zero though, because it was doing it with Trade Zero as well. So it's a little bit more than 6 million. But
wow, goddamn, that's incredible. How did it feel to not only have a trade like that, but to celebrate it with an unbelievable reward, which is a car? And second question is, how does the car drive? How's that? What's it like?
The car has its special sound. It sounds like, I don't want to say ghost because it has a ghost sign on the car. It has that weird noise. It sounds pretty good. Other than that, it's got 2 batteries. It's I think it was VA. Yeah, 2 batteries and VA. I think it was 1,600 horsepower. So.
Do you drive it often, or do you drive the Benz mostly, like day to day, or the Rolls, or?
Day to day, it's the Rolls and the Benz. I don't drive that car often because it gives you. I mean, when you drive on the road, it brings too much attention. Like, some people get jealous, and some people, it's.
Everyone's trying to race you in a Honda Civic with like an exhaust.
I mean, yeah, and they won't, let me switch lanes because they're trying to take pictures and they're, moving the same speed as me. So it's, got pulled over once because I couldn't get over the other lane until the last second. Yeah.
You mentioned that people get jealous. Like, have you had like bad experiences with people, or do you just like think that, or like is that something that kind of happened, or?
I think the first car I bought was the McLaren, and I was parked nearby the street, and somebody got jealous and got this, I don't think it's a pencil, but I think it's a pen, and it, it scratched through the entire door.
Oh.
And that's the first time.
That was the first time you killed a man.
That was the first time the car got scratched, but there's
Wow, that's crazy. I mean, it's very impressive what you've done with your trading, man. Because I feel like you're one of those type of guys that when the opportunity is there, you'll strike, and aside from that, you'll just wait. So how do you personally handle the FOMO of waiting for those setups, and kind of on that turn, how do you have that confidence to, pull a $6 million trade out the bag?
I would say, to be honest, like everybody is struggling with that waiting game, especially in last year and this year. I think last year we had like 5 months of nothing other than bigger caps. So what I used to do is I track a setup that I wanted to trade, and specifically um, how many times it happened throughout the year, and each time, what's my winning percentage, how much I'm likely to gain, how much I'm likely to lose, and you can kind of get a rough estimate to see that this is how much you're going to make by the end of the year. So once you know the numbers, you are much more patient than other traders that can't wait for an opportunity and they start forcing trades.
So a lot of people,
No, go for it, Chuck.
a lot of people, tracking trades is, it's a common thing that we've all kind of been around, heard about, talked about doing. A lot of people do it. I myself have done it. I know James has done it. I know Harry's done it. Alex, he just catalogs everything inside of his fucking photographic memory. So, but what is it about your tracking that allows you to have such confidence in it? What do you think you do differently, or what is it about that data that when you're looking at it, you go, yes, I have to go big on this?
With high risk, first of all, it's the winning percentage of the pattern. So after you track a couple thousand tickers altogether, you'll kind of know what's the winning percentage, what's likely to happen. And it's not just the tracking of the data. Sometimes I record the moment of the stock tends to shift its momentum. Let's say it breaks down or breaks out, then you can remember or try to memorize that level too. So you can kind of get a feeling of when the stock is about to break down or break out. Typically with how much size I'm likely to go in, it usually starts with minimize your risk. So whenever you are, let's say you want to short a stock, and you not just by focus on your own risk, you also want to look at the chart. Look at the chart that to think, you know, what what's the top short sellers likely to take an entry on, and most of them will likely to minimize their risk almost to zero. So whenever you are shorting a stock, and if there is a specific resistance or there's pre-market resistance, um, and they want to minimize their risk up to zero, or there's an intraday parabolic, they always wanted to sizing into a push, and that's when you see a massive stuff into one candle, and that's where momentum tends to shift. Um, and whenever you are finding that point, I call it net 0 point. So if you find that point, and you can get in with pretty big size with a little bit of risk, that's where I started to um, piling up my size. Once I get the first pullback, or as soon as I go in, and when it pulls back about 15%, the momentum tends to shift. I will cover decent amount of my size to get a some of the gains. Then I will start adding to the bounces. This way, I will have a little bit of cushion of playing throughout the day, and that's where the profit tends to grow and snowball.
It's unbelievable. I think that's like, is it hard for you then when you have the opportunity to short with such size, like a DWAC or something like that, then day to day, like has it become almost like not enjoyable for you? Like I know it's still making money every day, but like how you can't quite obviously use the same size day to day. So how does that work for you?
Yeah, not the same size, but I don't really use the same size on on DWAG, like on every single ticker. I track patterns specifically and categorize them into different sections. For example, like lower floats with lower cap, market cap, and when they are trading specific volume, you can kind of calculate. Well, first of all, you do not want to exceed 10% of the float, 1% of the volume. That's a rule that I typically play it throughout the day. And once you don't exceed that number, then you once you trade it for a decent amount of time, you will kind of find out, um, especially going into intraday patterns, not multi-day runners, but intraday, our low float can only sometimes handle 500,000 positions, 600,000 positions. If you go more than that, it's first of all, you are taking too many shares. You are once you go over 10% of the flow, you are going to affect the price. And to be able to exit into a stock, you are basically pushing up the bid. Uh, in such a large range, then you cannot get out at the point that you wanted. Um, so with different patterns, you have to kind of know that first of all, what's the max size you can go in before uh, before you cannot get out at the point that you wanted. Um, that's for intraday patterns. Then if you go into multi-day patterns, then you kind of have to go through all that data again to see what's the maximum size you can go in. I have those. Most of the time, I have those sizes figured out already. So let's say I go into an intraday pattern, I look at this ticker, check out the flow, check out the market cap, check out the volume. I will know that, okay, well, 600K is about the max I can size in. Then if I win, I will probably make up to 100K to 150K in my trade.
Wow. Did you learn that early on that did you ever make that mistake? Did you ever take too much size according to the float and just really put yourself in a bad spot? Or is this something you kind of knew from the beginning if you were going to what you had to do?
Oh, definitely made mistakes before. Yes, I have taken I would say I think it was 15% of the float. And yeah, it was not very good. I think I took like 40% losses on it. I was trying to get out with only 15% risk, and after I completely got out, it took like 43% losses. So it's
Do you ever swing these positions short multi-day? For example, it doesn't have to be DWAC, but if any of these stocks that you're shorting, okay, you locked in 100K, 200K, do you still keep maybe 50K shares, 100K shares for 2, 3, 4 days more? Or are you mostly like, you know what, let me get out, let me sleep well, and I'll just hit it again in the morning?
I keep it. So I only hold positions maximum in one day. So just one night, then covering the next day. Typically, when with those swing positions going into multi-days, I will cover about, I think it's 75% of my size. And if the ticker trades crowded enough volume, typically there's a balance coming in the next day. So I keep that 25%. Mainly is for the average, so I can add in the second day. Make sure that my average is really high and going to stay positive throughout the day. So once your average is pretty high, you are not, in terms of your entry and exit, you will probably not get nervous when the stock is bouncing in the second day.
Yeah, maybe we can kind of switch gears a little bit and talk about the recent sector we had, AI. Did you trade any AI tickers? Did you trade any China tickers? Maybe you can kind of talk about that. Maybe you didn't trade any at all.
I traded all of them. So it's
Maybe you traded some. Okay, you traded all of them.
I mean, it's been a pretty exciting. I don't know, the last 2 months. Starting, I mean, the AI wasn't as crazy as the last one, TOP. Yeah. So for the AI sector, I think I think the biggest loss I took was CXAI on the bounce, not on the first initial round. I think it topped around 70, consolidated around 15-ish. Then I think it was on that green day right there. Yeah, right there. That's the loss I took because the resistance range is so wide. That's where I was taking paper cuts little by little. I think that was 140 losses, 140K losses. I think that's the loss I took specifically to the AI sector. that I
Consider that resistance range to be like 13 to like 20, or would you consider it to be like a little bit higher?
15-ish, I think.
15-ish, you'd
Yeah.
consider that to be like
Yeah.
more so kind of the
Right.
resistance.
Yeah, it topped around 10, 11 3 times. So I shorted it on the third time when it was panicking. If you zoom in, and when it reversed, that's where I cut my losses. So
Makes sense.
This was after the first initial run. On the initial run of CXAI, when GFAI, SAI, all these crazy stocks were going, were you attacking during that time as well?
I know I did not attack it. I knew that this is the first sector that everybody wants to get their hands on, because typically when you have a long period of time of nothing, and a lot of people tends to go very aggressive on those stickers. So I think I attacked it on the backside for GFAI. I think I made 300, 400 on the backside.
That's pretty good. This is a bit of a psychology question, but from someone like you who has had such success on shorting like DWAC and like other sectors, how do you keep yourself from getting like overexcited on the way up? Because like you obviously you were very patient on the way up, and then when you hit it on that bounce day, how do you not force yourself to taking on too much risk too fast? And like because you seem to do really well at risk management and like keeping your losses really small compared to your wins. And I think it's impressive, but how do you kind of keep your mental state when the trade is actually happening?
Okay. Okay. So there's one thing that I typically keeping track of is um, I split market cap and flow into different sections. So let's say if the ticker started with under 100 million market cap, and when it then once it did its multi-day round, you track on the top of the candle to see. Typically on the highest day volume, it is the top. So you can kind of track how much money was traded in that top of the candle. Then after that, you can use that as reference to trade pretty much all of the multi-day rounders in the same sections. So if the initial market cap is under 100 million, let's say the top of the candle traded 30 million shares, around 50 shares, and that's 1.5 billion in terms of dollar amount. Then you can use that dollar amount to calculate if the multi-day rounder tends to finish its run for the day, or it still has continuous uh, volume that's going to come on the second day. So let's say today, so number we got is 1.5 billion, and today only traded maybe 500 million, 700 million. So there's a high chance that the ticker is likely to go up another day. And once you know that, you'll be pretty patient to wait. So
you're very data driven. You're really looking at the stats. You're looking at the data. You're making sure that you understand if it fits the criteria, if it doesn't fit the criteria. It's really key, because I feel like a lot of people in trading, they just think like, hey, you show up, you buy this stock, you short this stock, and it's gonna go up, maybe it's gonna go down. But you are very data driven to be able to say, hey, you know what? I've seen this pattern occur 1,000 times. There's a 90% win rate. I know that the float is X, so that means that my size is Y. And based on the win rate that I've had in the past, I could do this. So I think that that's very helpful to a lot of people to understand that you're treating this very professionally. You're not waking up and winging it. You're not just gambling, rolling the dice. You are treating it very, very, very high level professionally.
but it's whenever, and even though I do data up to the extreme, I still make mistakes. So I can't imagine people don't do data. How many mistakes they make. So yeah, going into TOP, especially into the last 2 weeks ago. TOP, I was talking to the owners of different brokerage. There's a firework blowing up for different accounts. I think a lot of people went negative equities on this ticker. um,
That is crazy chart.
yeah, and I think I personally took, I think it was 200K, not 200K, 140K. So 140K on the first day, not on no, not on that day, the previous day. So
right. The after hours.
Yeah, so I shorted into consolidations around, I think it was around 20, at it at 19. After it didn't break down, that's where I covered by the end of the day. So that last candle is where I exited. My size was pretty big, so I think I had like 70K shares.
Wow.
And that's
Was
where
that you pushing it up after hours?
no.
I'm just kidding.
I exited right before the market closed, and then that's where I wanted to go long. And I had my hands on the trigger. I didn't pull it. But
if you went long, you would have retired, bro.
I probably won't catch the top, to be honest. I'll probably exit around 30 and leave a little bit size and goes all the way up to like 200. Very little size.
Yeah, so this candle had 125,000. So Dux was like 60% of that candle.
Yeah, that's me right there.
That's Dux right here. That's Dux. Yeah.
How do you deal with those losing days? Like, what do you do to release stress? Because trading could be very stressful. Like, the good days are never as good as the bad days are bad. So I feel like, at least in high level trading, when you're talking about 6, 7 figures, maybe even 8 figures, there's gonna be some really bad days that come along. So how do you personally release stress? How do you manage stress? Do you have any advice for people that are stressed in their trading?
I mean, I get stressed, and if I get a bad trade, I go take a walk or go to the gym, do some meditations, whatever works for you.
Drive a 1,600 horsepower car.
Yeah.
Yeah, see, some of these things aren't available to us peasants, but I get it.
But you see, the hardest part to really for stress, I think, in this almost like 9 years of trading, is to actually face your own mistake. A lot of people that when they made a bad trade, they don't want to go back to their trade, or they don't want to go back and look at their account statement of what stupid things they did while their place their entry and exit. The hardest part is for me to like actually admit that I made a mistake, not finding excuses of, oh yeah, the stock is manipulated, the stock is this or whatever. When the stock is always going to be manipulated, and it's up to you to manage your own risk. You can do whatever to, you can even do counter strategies against those people that are trying to manipulate the stock. So it's when you take a loss, and the mistake is on you, it's not on other people. And a lot of people tend to find excuses. Yeah.
So you talked about being a trader now for nearly 9 years. I don't know if you remember that. I'm sure you do remember this, but back in the day of Profitly, there was this guy that I recognized that had a picture of the Hulk, and he was just quietly making better trades after better trades after better trades. And then it turns out it was this guy named Steven Dux. And I was like, what the hell is this? So what was it during those times that allowed you to gain such consistency? What did you do in the beginning? And then when you figured that out, how did you stick to it?
So I think the timing that finally clicked, it was, I went back and looked through all of my trades, and I was be able to distinguish which one is which trades is necessary to place, even though it's a loss, which trade is considered to be an overtrade. And once I filter out all of the losses, all of the gains, that's the opportunity that I have to place an entry and exit, and get rid of all of the overtrading and what is considered not to be tradable. Then I recalculate the profit, and you know what? It's about 10 times higher than the ones that I have right now. So that's where I just stopped completely on overtrading, filter out all of the trades that does not filter the criteria, and only stick to the trades that I know, and I know which loss it's. When I take a loss on the trade, I know if it's necessary or not. And some of the losses are unavoidable. Some because it's you're sizing it into a 80% winning percentage, and you just happen to hit a 20%. It's that type of losses are not avoidable, but it's manageable. It's as long as it's under your risk management, you're okay with that. And long run, without over trading, fitting your criteria, and you are always going to take losses. As long as it's under your risk management, and always you should be fine in your trading career.
I think you kind of mentioned at the start, like the past 2 years, obviously, haven't been as ideal than the couple before them. And maybe you can kind of talk about like what setups are working right now, and like what types of things are working for you in this kind of environment.
Okay, so there's two things I found out. I just personally, my own opinion after observing in the last 2 years. First of all, is trading definitely became more competitive than usual compared to 2021. So it's a lot harder for short sellers to, I would say, to actually make money compared to 2021. And there's a long time period of time that there's completely nothing, and every single person, even me, got a little bit FOMO because I want to place a trade. There's there's basically nothing to make money on. So I think it was last year August. Then we had BBBY. After that, there's pretty much nothing. So the volume in the market is more condensed or concentrated in one place. And whenever there's a ticker that came in, it's HKD or BBBY, all of the volume sounding concentrated all together. But on the intraday volume, it's been declining in the last 2 years consistently. So what I tracked that in 2021, 2020, the intraday maximum dollar can be traded is up to 1 billion. Then going into February, it will become 700 million. It will go into May or June, it becomes 500 million. The lowest we actually got is actually 250 million. So in terms of intraday volume, we dropped intraday dollar amount being traded. We dropped 75% compared to 2020, 2021. So
what do you think that's attributed to? Do you think it's people that are just losing all their money because they were apes on AMC and GME, or hodling onto everything, or what exactly is it?
It's the raising interest, man. Everybody be putting their money up on the raising interest. They're getting more financial pressures than usual, so they don't have enough money to trade. That's what I think. And whenever there's something come up, and usually it's the first 1 or 2 trade after a long period of time of nothing, there's a really intense squeeze. HKD went up 2600, and TOP went up to 200. And usually the edge comes right after that. So either there's a sympathy play, it was MEGL, going into the second day, shorting against the pre-market resistance. Yeah, that's typically where the edge is. And after that, it depends on what I typically viewing is short sellers typically has a lot more money than the buyers. So whenever there's a squeeze, big squeezer coming in, the shorts get squeezed. So the short sellers deposit money into the buyer's bank account, and the buyer's gonna use them to do it again because they think they can, pull off another TOP. So then the short sellers go in to get their money back. See, this is what happens in the last 8 years. It has not changed at all. So the only problem is, as a short sellers, for you to distinguish compared to other people, is you don't screw up on the first run, and you will be able to pull money after the stock produces edges, and be patient enough to catch the edge after the stock finishes squeezing. Even though sometimes you can completely avoid all the when the TOP is going up 2,000, going up to 200 or HKD, you just don't touch it and you just wait because short sellers screwed up and the buyers will come back for more. So that's where you can make your money out. That's where typically I make most of my money.
That's really
But how,
interesting.
That's brilliant.
Yeah.
but how did you do on? Did you trade ASNS?
ASNS. The one yesterday?
Yeah.
Oh yeah. I made 140. No. 210. Yeah, 210.
Nice. So what that's sort of kind of the explanation that you were talking about. You let TOP run, and then you wait for those other little ones, like you were saying, MEGL, which tries to turn into the next TOP. And then, for example, with ASNS was one of those where you had MINM and all of those other ones going wild, and you waited for this bounce play on ASNS. So on these bounce plays and the lower volume, how are you adapting to that?
Okay, so there's one rule that I kind of track those. We call this hyped up play. So we have a bunch of those, like the marijuana sector back in 2018, the shipping, the DRYS shipping sector, all the HKD, Bitcoin, and all those Chinese stocks. One thing that, especially during those hyped up sector, you want the first round to trade enough volume before you go in on the second bounce. So if on the first day, on that first round, it did not trade enough volume, you have to wait some type of consolidations or fake out for the second bounce. If there is actual volume traded and there's consolidations, yeah, go ahead and go ahead, hammer that size in. But if it's without volume, if it's under 10 million microflow, and he does, I think it was the ticker. It's just a full parabolic, and 90% drop, so there's no actual entry for you to take. That's the chart you have to wait for fake out or consolidations to be able to make money on.
Amazing. Steven, does it ever stress you out, as we were talking about how the market's changing a lot now, there's a lot less participants in volume? Does it ever stress you out or concern or worry you at all that eventually some of these setups won't work? Do you continuously track new setups, or is this something you feel generally over the course of your lifetime will always kind of happen?
Of what? And the market is always changing. Sometimes it annoys me too. The one today, what was the ticker called?
What was today? Carvana?
No, not Carvana. The one went up with WAL. It's the banking stock.
PACW.
Oh yeah.
Yeah. Bank.
If you go back to that chart and
what is
you
PACW.
Yeah, PACW. Yeah.
PACW?
Yes, sir.
So if you go back to that chart and you compare with the chart FRC, it looked exactly the same on the second day, and it triple topped. So FRC triple topped at 50, and did a consolidation, went down, and I think that's where I shorted it. Today, did the same exactly consolidation, triple top at 5, and that's where I pulled my size. That's where I went in. I think it's around 5. When it broke that, I took a loss. I mean, there's nothing you can do because you have to manage your risk. First top, second top, and the third one on that red candle, that's where I sized in. And as soon as it reversed, I just covered and went all the way up to 6. So I think one thing that's still in the market is whenever the stock is on parabolic, never try to size into the parabolic and the stock is crowded. So let's say before 10:30, you already traded 40 million shares, 40, 50 million shares. So going to the rest of the day, it's going to trade more than 100 million shares. Where is that 60 million shares, rest of the 60 million shares going to go? When this stock is trading that crowded, and no matter how good you are as a short sellers, you won't know how far this thing can go. So typically, whenever you're seeing two similar chart, you want to size in at the same place, but if it breaks your risk, you have to take the loss. So that's for I think PACW today. Yeah.
Are there any traders that you kind of like learned a lot from, or were able to kind of like piggyback off of when you were first starting? Like, I know somewhere I saw like that, like you and Tim Grattani are friends. You've talked with him before. Did you ever like kind of learn anything from him, or was most of your stuff just yourself, like just tracking?
Yeah, I would say most of my stuff is self-tracking. I talk to Tim all the time. I talk to him. We've been friends for like a couple years now, and we also live in the same place. Back in when I was in Ohio, he lives in Columbus. I live in Cincinnati, and we talk about trading all the time. And sometimes I get what he is thinking. Sometimes I kind of take off his ideas and to think, okay, well, does it fit the trading logic or not? If it doesn't fit, then it's overtraining. If it fits the trading logic, and if I do something I don't understand, then I will ask him, and he will explain what his thinking process. So
Yeah, can we
'cause-
go ahead,
'cause
Harry?
He's mostly kind of like a long. Well, now he's doing like a lot of longs, and you're mostly like a lot of shorts. So like when he talks to you, are you like, yeah, I understand that, I get that kind of like multi-day breakout setup, or are you more like, this confuses the hell out of me?
it doesn't confuse me because when he gets in, for example, 6 AI, he gets in like $1 or something. So I mean, that's the point. I would definitely not short. And so typically, he will ask me, "Hey, Dux, where are you gonna short?" And I'll tell him this
So
price,
that's where you're gonna sell.
and then that's where he sells.
That's hilarious.
Where do you think this can go? I would just give him.
That's awesome. So
can we take a look at this ASNS real quick, just to kind of review here? I think this was, or not ASNS, MINM. This was that bounce situation you were mentioning, and how you were talking about how you don't touch any of these things unless they trade at least 10 million volume. So if we take a look here at MINM, this was one of the China plays that was running with everything. And this was one that actually traded over that 10 million number. Whereas if we look at ASNS, it was 2 million and it had the ability to break that high. So what you're kind of getting at here is that if it traded more than 10 million shares, the chances that there are still people that are bagged up top once this finally bounces, you're saying basically that this volume isn't going to be able to overpower the bag holders. Am I understanding that correctly? Beautiful.
Yes, there's a high chance that intraded round will not, beat the back holders on the first round.
It'll start hitting all of that where everything crashed off, and that'll turn into all the resistance that you're playing off of.
Yeah.
So how do you sit there and wait for that opportunity? You just toss some orders out there and just go, well, we'll see.
No. I never toss orders over there. Yeah.
I think you just triggered him, Joe.
So go ahead, look at the chart.
Yeah.
If you go into intraday on the second round. So on that first spike, you see there is no consolidations.
Right.
And on that top, what's the reason of you shorting there? Your risk compared to the resistance. Go ahead, look at the resistance. Probably, it's so far from where the parabolic is.
Right.
Look at it. Yeah.
You're talking at least 8 before it ever hits any kind of the first consolidation whatsoever.
I mean, the way I look at it, on the first round, there's no consolidation.
Gotcha.
Yeah. So first of all, the first top, it doesn't have any type of reason for you to short because there's no risk for you to manage. Then going to the second breakout up to 8, still there's no type of consolidations for you to manage until it consolidates. The stock consolidated between that 6 to 7. That's where you're supposed to find your entry, just as in risking the top of that 8. Typically, I risk the 75% of the consolidation range. So it's between, I think it's around 6 to 8. So the range of that, so the 75%, um, which is probably around 750 area. The 75% of the consolidation range.
Oh yeah, so it's a $2 range, right? And so
Yeah.
75% of that would put it at 750. Yeah.
Yeah.
Yep.
Mhm.
And
You
then you
ever,
risk you're aiming to enter around that 750.
No, that's my risk.
Okay.
I'm probably gonna enter between I think a 670, 650.
Gotcha. Okay. Awesome.
That's amazing. Steve, I have a question for you. So you just listening to you talk about trading, I mean, you're obviously a freaking savant and 100 times smarter than I am. But but so you get so involved and so in depth in your setups and your strategies and everything. Do you do that outside of the market with other investments? Like, are there other things that you try to put money into? And like, do you get as analytical about those things as well? Or is it really just trading that kind of gets your brain kind of like how it is now? Are video games like, is something like this for you?
StarCraft is very similar.
Yeah, very StarCraft.
Yeah, I played a lot of StarCraft, and it's about guessing what people are doing, and it's very similar. You have to kind of guess where the back order is. You have to know that where the short seller is, what level will make them nervous, and that's typically where the short squeeze is. And knowing where the buyer is, you know what level will get them nervous to sell. You know where the short seller is, you will know what level they're more likely to cover their position to get nervous. So all these has to be combined with your strategy. It has to be data driven, but by observing the market, you will have an idea of the buyers and sellers is, and use your data. And typically, when those one psychology, one pattern, when they are leaning towards the same direction, that's when the pattern have the highest winning percentage.
So what did you do to practice to get so good at that kind of that level of intuition?
Uh,
Did you just like
level.
sit outside of Walmart and just watch people walk in and out and just predict what they're going to buy?
I mean, everybody behaves, I would say, the same. So, kind of imagine yourself and started trading, at the very beginning stage as a beginner. And whatever you are thinking as a beginner is typically where the buyer or the short seller is.
So what do you think somebody could do to improve that skill? What could a person do to get better at that?
First of all, you have to survive, because most people get blew out of market, within the first year. So you have to. I think the only way I found out to survive in the first 2 years is focus on one thing that you know. Don't touch anything that you don't know.
Yeah.
And until you grow enough capitals, and that's where you can spread around and finding different strategies, and make sure break apart your account into multiple different. Let's say you have a 50K account, you have 6 backup accounts. So if you blow up one account, you will have a second account ready to go. And that's the, I would say, essential part, especially for beginners, to make sure you are stay alive in this market as long as it gets. The longer you stay, the better you will get. So never try to make your money in one shot. It's about experience.
Yeah.
when
Piggybacking on what James said earlier, you make all this money trading. Do you have any investments outside the market, real estate, indexes, venture capital? How do you manage your money outside the market, or do you have it in your account, trading account?
Having real estate, making passive income, rental properties. Yeah.
So you just focus on rental properties. You don't put anything into like Apple or Amazon, anything like that?
No, because it's very easy to mix up with your trading mindset. When we're doing day trading, it's all short term. Whenever you're looking at the ticker for 2 months, it kind of confuses you. So, and typically, when you take a position in Apple, when you take a position in Amazon, as a trader, you definitely want to look at your positions. I mean, if you're bored, so I might as well just invest in something else. I mean, it's all slow. So
when you're looking to short into, let's say the chart that we just looked at before, on that kind of resistance, are you ever paying attention to the vol or the VWAP on that day, saying like, okay, I think that this is where the average price of the bag holder could be, and I want to kind of like look to short around there? Or do you just not pay attention to that at all?
oh no, View app doesn't work. I mean,
Dux is like, shots fired. Shots fired. Here we go.
View app works when there is concentrated volume on consolidations. View app does not work when there's fully parabolic up and down. So there's
So
conditions when View apps works. Yeah.
So it needs
Because I see people on Twitter talking about this all the time, that it's like, oh, well, we used VWAP from the prior day's resistance to top tick this. I see that all the time on Twitter. And I was just wondering if that's something that you kind of saw.
I mean, a lot of people are a little bit obsessed with the indicators. I mean, if you think about the market, or from the very, I would say, fundamental, as a very base level. First of all, people are placing trades, and when the chart moves, it's what people are placing trades behind the computer, and it's all about what they're thinking, how to really counter them. So short sellers makes money from the buyers, and they have to know the psychology behind the buyers. And indicators like RSI or View app, they don't have any I would say direct relationship with how much how many shares did this buyer buy, and if they get caught back holding, what's the level they're likely to sell. I mean, those indicators doesn't have the direct relation compared to those psychologies. So the only indicators that I use, volume. Typically, volume indicates how many people are buying and selling. And if you are using, the average statistics, and 90% people are going long, then you can kind of calculate, okay, well, at this level, there's, this amount of backholders. And when it hits to this resistance, the buyers will not beat the backholders right here, because, on this candle's volume, there's not enough buyers. And when there's 10 backholders versus 8 buyers, the backholders, of course, going to win. So I'm a short seller, and I'm likely to take advantage of, the new buyers are likely to lose. That's how resistance work. So it's, yeah, those are the only indicators that I use. And also, one thing I want also track is, I think it's just my assumption. So for different multi-day owners, and of course, stock involves manipulations and hedge fund. But from my assumption is, it, at least smart money, whenever you are buying, let's say, a low flow, you do not want to exceed 100%. You do want to buy up the entire flow. Sometimes it does happen, but
AWX.
yeah, AW, yeah, yeah. But as smart money, you do not want to buy up the entire flow, because whenever you're selling, you're just playing yourself, because you're selling it, to yourself. So as a smart money, you want to sell it to other people, right? And you make that, make the money while the stock is going up. So typically, you do not want to exceed 30% or 50% of the flow, because you want to leave the rest of the flow to other buyers for you to make money from. So then, if this specific psychology applies into the multi-day runner, then there's going to be a limitation of how many dollar can be traded in different market caps. So if smart money can only apply 30% of the flow, and there's retail money going in, then you can kind of, once you look at different multi-day runners, you can calculate, okay, well, between 100 million or to 500 million market cap, and when the stock goes fully parabolic, when it consolidates, this is maximum amount of money can be traded in a consolidation. Once it trades in a certain amount, and retail runs out of money, so no more money can be support the bid, or no more money can be added into the ticker for the ticker to go up even more. And then that's where the chart exalts, and that's where you short and take your profit. So
I just have just one more question real quick about filings, SEC filings, because we never really talked about that yet. And do you ever kind of like, I know you're more of like kind of a pattern guy, but do you ever read the filings and kind of put on your tinfoil hat and say, okay, maybe they're trying to pump this up to do an offering, or okay, maybe they're trying to pump this to get to these warrants, and then like maybe look to short there? Or are you just pure pattern, volume, don't care what's going on, don't care about offering or whatever, I'm just going to focus on what I know?
I have actually looked into those filing before. It actually affect my I would say judgment whenever I'm trading, because I think there's few times that there's warrants around 4 and there's consolidations at 4, and people think the warrant is going off and selling it to stop at $4, and a lot of people are packed in shorting at 4. Next day stock gaps up to 12. So I think it's all about risk management and focus on what you know, because there's a lot of stuff that you don't know, and you can potentially you can even trade. You can trade anything to in the market. To sometimes you're lucky to make money. So just trade what you know, and you will make
Make a killing.
Make a killing, yeah.
Good answer.
All right, man. So to wrap up here, we want to talk about some regular guy questions. Okay. These have nothing to do with trading at all. This is just us getting to know Steven Dux, man, just to show how much of a regular guy he is outside of his genius level mindset. So number one, what was your first job?
First job, I worked at a dorm. I think it was a midnight shift. So it's between 12 a.m. to like 7 a.m. to check people in on the dorm. Yeah.
Oh wow.
It's like $6 an hour.
He's come a long way, fellas. So what was your favorite hobby? What is your favorite hobby outside of trading?
Favorite hobby? I play tennis. I play a little bit of basketball. Play a lot of video games. League of Legends, Counter-Strike, whatever you name it.
Awesome. So what are you reading any books? What's your favorite books lately?
I don't really read trading related books.
That is like our lowest answered question. I don't mean trading related. I just mean any books. What's your favorites?
Favorites? I mean, recently I'm reading Cas9 gene editing. Yeah.
Wow.
Ooh,
that sounds
yummy.
And yeah, I like I read quantum physics. There's one thing that I like to read that's, I would say, semi-connected to stock is what's it called? The psychology of economic behavior. It's not a book. It's a genre, but it basically talks about the psychology, how people use their money.
Oh wow.
So, yeah.
So what's your favorite TV show? What do you like to watch?
I do not watch TV. I watch a lot of anime. I watch what's it called? I watch Naruto.
Dragon Ball Z.
No, I watched a little bit Dragon Ball Z, but yeah, but I watched Dragon Ball Z.
We gotta get you into that.
What else? Yeah, I watched a lot of anime. Too many. Yeah, you name it.
What's your favorite food to eat?
Favorite food? I mean, I like all kinds of food. I'm not really picky. It just, I can't handle blue cheese. That's
ooh, yeah, that's ooh. Yeah. What's the most memorable vacation you've taken?
Memorable vacation. In Maldives, I think there's a girl that was
Oh.
drowning.
Oh,
So
never mind.
I went down trying to save her, and I almost died
What
trying
the?
to swim.
Damn.
Trying to
I did
swim.
not expect the story to go that
I
way.
did not.
I heard the
Wow.
girl, I heard Maldives.
Yeah, trying to swim back. Yeah, I was cutting it close, but
Wow.
Did she make it?
no, I wasn't naked. I had the.
No. Did she make it?
Did she? Oh no! Did she make? Yeah, she made it. She made it.
What?
No, oh my god.
That's how we're gonna start the podcast. Was she naked?
I'm
I
sorry.
have
I'm
another
totally
question.
off
Are you
track
dating
now. I
anyone?
don't have it. Sorry, what?
You are? That's cool.
That's funny.
I'm still just okay.
For a second.
Where was I at?
Leave it to me.
Oh my God. Well, I think that's pretty much all I've got for you right there. I
Yeah,
think that's a great wrap right there.
That's awesome. Thanks for coming on, Steve.
That's awesome,
Dude,
Steven.
Thank you, dude.
Thank you so much for being here, man.
All right, guys, I gotta go eat. So
Yeah,
Yeah,
no,
bro.
go eat.
oh, thanks for having me.
No
of
problem.
course.
Thanks for coming. No blue cheese. No blue cheese.
Yeah.
No blue cheese. Yeah.
And keep
Have a
your
good one,
clothes
bro.
on when you swim. Stay clothed.
See you guys.
See ya.
Thanks, bro.
Later.
Take care.